We are now going to be looking at the basics around VAT. Now, this section and this area is very important because this gives us the functioning, the basic workings of when a person needs to raise VAT. When do you charge VAT? So when you go to the stores and you see that they've charged you VAT, how do they know when to do that? What tells us to do that? Now, we are going to be studying this. So we've mentioned earlier, we're going to study this from the output tax side. That is always the starting point. The input tax is basically whatever the output tax was for another person, as we've seen so far. So we study it from the output tax side. Now, when we're looking at discussion questions, for example, these are some of the areas which start getting important. Now, Section 7 of the VAT Act is the most important part of the VAT Act because Section 7 tells you when must a person charge output tax. Now, this section is important because they won't tell you to do this in an exam, you'll need to know this. But if they ask you some sort of transaction and you're unsure whether or not there should be VAT on it, you're going to have to think of Section 7 and test it against Section 7, the requirements. So, before we start, this first little paragraph here, let's just read through that. It says, subject to the exemptions, exceptions, deductions and adjustments provided for in this Act, there shall be levied and paid for the benefit of the National Revenue Fund a tax to be known as the value-added tax. So they say, we take into account everything in this Act, which is the VAT Act, then you need to charge VAT. Okay, so there's three situations in which you need to charge VAT, A, B, and C. A is the one which is the most important, and this is the one that applies to basically all vendors. B and C are a little bit more specific situations. So let's start with A, and that's where we're going to also spend the majority of our time at this point. Okay, so when do you need to charge VAT? So you need to charge VAT if there is a supply, look at the words I'm highlighting, by any vendor of goods or services supplied by him, right? Supply by him or her, by him on or after the commencement date in the course of furtherance of any enterprise carried on by him. Now, these terms, and I'm just going to use the same color here. These are the words that we've highlighted here on the supply by any vendor of goods or services. Right, supplied, that supply there that you see there is basically the same as that supply, so I'm just going to remove it for now just to make it clearer. So, if there's a supply by a vendor of goods and services and they are carrying on an enterprise, then you need to raise output VAT. Now we're going to look at all of those different ones in a second. I just want to quickly talk about B and C. B says you must raise output tax if you import goods, or C, if there's imported services. If you import services, so you import goods or import services, there will also be output tax. For now, I don't want you to look at B and C. We're going to study that and consider that completely separately. So your focus at this point in time is on A, which says, just going to take out the highlights, do it one more time, just to show you what's important. You must raise VAT if there's a supply by a vendor of goods or services and they're carrying on an enterprise. And the VAT must be calculated at 15% of the value of the supply. Right, so over here, you'll see, I've also just indicated the important words again. Supply, vendor, goods or services, enterprise. So let's start looking at the first one. There must be a supply. So what does a supply mean? Section 1 of the VAT Act gives us a definition of supply. It says supply. It means, or it includes a performance in terms of a sale, a rental agreement. Those are the two most common ones we see. Installment credit agreement and all other forms of supply, whether voluntary, compulsory, or by operation of law, irrespective of whether the supply is affected, and any derivatives of the supply shall be construed accordingly. Now, this is a very broad definition. So they say to you, it's any sale, any rental agreement, any installment credit agreement, and all other forms of supply. That can be voluntary, so you choose to make a supply, compulsory, right, you're forced for whatever reason, or the law tells you to do it. So they say it doesn't matter if it's your choice or not, if it's a supply, it's a supply. So what's a supply so far, guys? If I make a sale to you, it's a supply. If I rent a car to you, it's a supply. If we sign an agreement that there's a barter transaction where you give me an asset and I give you an asset in return, that's a supply. Okay, so it's very broad. Okay, for now again, I want you to, the one I wanted you specifically to also just pay attention to is a rental agreement, because people often forget that. Right, goods and services. Again, definitions in section 1. What are goods? What are services? So goods, it means corporeal, movable things. Corporeal means tangible, movable things. It also includes fixed property, so that's immovable, and any real right in any such thing or fixed property. And electricity is also considered to be goods. Right, so it's movable things, fixed property, any right to that, so a usufruct and so forth like that, electricity. But it excludes money, mortgage bonds, stamps, formal cards which have a money value. Right, except when it's a collector's piece. So for the most important one there, money, I want you to consider. So if I give someone money, it is not VAT. Okay, very important then here. This is an example. If you go to the stores, so let's say there's a clothing store, and you, that's you, want to buy your friend a gift voucher. So you go to the store, you give your friend, you give 300 rands, let's say, they give you a gift voucher worth 300 rands. Now, do they charge you VAT at that point in time? There's a supply, yes. Is there goods? No, because goods exclude money. You'll see also there's no service being rendered at that point in time. So money is just excluded. So if you give money to someone, there's no VAT on it. So gift vouchers, guys, is giving money. Right, and then this comment over here is very important. I want you to make sure when you're looking at this goods now here, can you see nowhere here do they mention the term trading stock? So what students sometimes do is they think when they talk about goods, they're talking about trading stock. So if a vendor, so let me use the example, I'm a vendor, I'm a company. If I sell you trading stock, most students will say yes, there should be VAT on it. But if I'm now that same company and I sell you a building or a machine, something that was a capital asset, so not trading stock, then they'll go, no, there's no VAT because it's not trading stock. That's wrong. It's still goods. So if I sell any of my capital assets or trading stock, it's all goods. Right. Then there's services. So what are services? It means anything done or to be done, including the granting, assignment, cession or surrender of any right, or the making available of any facility or advantage, but excluding the supply of goods, money, or any stamp, which is contemplated in paragraph C of the definition of goods. So what are services, guys? Anything done or to be done. So rental, for example. You agree to have someone come and paint your house. All of those are services. Right, I'm also going to say here, this includes intangible assets. Right, because an intangible asset they basically treat as something a right, something to be done. Because remember, goods only speak about corporeal things. Alright, so that's goods and services. So we've looked at supply, we've looked at goods and services. Just taking you back. When should there be VAT in terms of section 7? When there's a supply, so sale, rental agreement of goods or services, fixed assets, trading stock, corporeal things, not money, services, anything done or to be done. So we've done that. So now we're going to look at vendor and enterprise. Right, so enterprise is the next one. So what is an enterprise? So first of all, you need to see it. It's an important concept for VAT. Especially why? Because we see in section 7, if there's an enterprise, there must be VAT. Right, so that's why it is important. What is an enterprise? So let me just quickly, in general, try and explain to you what the enterprise before we even look at it. An enterprise is when you are carrying on something which is basically considered to be a business. Right. So if I have a company where I buy and sell things, that's a business. If I rent out things to people, that's a business. If I work as a salary for someone, so I earn a salary, that's not an enterprise. For me, the person who's running the business, for them it might be. For me, the salary earner, it's not an enterprise. I'm performing a job for which I'm remunerated, which we'll see in a little bit. Okay, so for now, I just want you to understand that if you are carrying on an enterprise, which is now, let's consider the business, things that you sell, you need to raise output tax. Things that you buy, you can claim input tax for. It is also possible that you're carrying on an enterprise, but you do things which is outside of the enterprise, and then there won't be any VAT on it. As an example, Mrs. X is a VAT vendor. Right, so she's carrying on an enterprise. She decides to sell her personal residence, so her home, and that's not part of the enterprise. So although she's a VAT vendor, and she's now making a supply of goods, she's not making it in the furtherance of an enterprise, so there's no output tax on that. So what is an enterprise? This is in section 1, guys. It's a long definition. I've only taken out the most important parts for our discussion here. Enterprise section 1 means, in the case of any vendor, it's any enterprise or activity, which is carried on continuously or regularly by any person in the Republic or partly in the Republic. So you must be in South Africa or part of South Africa. In the course of furtherance of which goods or services are supplied to any other person for a consideration, whether or not for profit, including any enterprise activity carried on in the form of commercial, financial, industrial, mining, farming, fishing, municipal, or professional concern, or any other concern of a continuing in nature, or in the form of an association or a club. Okay, so what are the most important things for you here? I want you to see here is an enterprise is an activity carried on continuously or regularly where goods or services are supplied for consideration, and it doesn't have to be for profit. So if I buy and sell goods and services and I sell it to you, that's an enterprise. I must charge you for it. So I must say, give me money. If I don't charge you for it at all, so then it's not an enterprise. If I don't charge you enough, so I make a loss, that's still an enterprise. Because I tell you here, it doesn't have to be for profit. Okay, so this is the most important one. So you can see, guys, activities carried on a continuous or regular basis. So if I buy shoes all the time and then sell it to people, that's an activity. If I've bought shoes once and then I decide I don't like these shoes anymore, I'm going to sell it to someone, that's not a continuous or regular activity, so it's not an enterprise. Most of the time you'll know when it's an enterprise, guys. There's no real tricks with it. You'll see it's something that happens all the time. They're doing it on a regular basis. It's not just a once-off transaction that has nothing to do with anything. Right, then the next one. This happened a few years ago. It was introduced in the Act. And this is because of, well, modern society and how we work with phones and apps and things. They say, if you give the supply of electronic services, guys, are things like apps, MP3s, etc. Right, so electronic things that you download. The supply of electronic services from a person from a place in an export country means outside of South Africa, where at least two very important of the following circumstances are present. So they say, over here, I just want you to see, they say, you must be in the Republic of South Africa. So you must be in South Africa or partly in South Africa for it to be an enterprise. B now says, BVI, so 6 says, a person outside of South Africa can also be carrying on an enterprise if that person is supplying electronic services and two of the following requirements are met. These are the requirements. 1, 2, 3. Two of them, two or more must be met. AA says the recipient, so the person buying it, is a resident of the Republic. Any payment to that person in response to electronic services originates from a bank in terms of the Bank Act. Right, so this is DAS South African Bank. And CC, the recipient, so the person buying it, has a business address, residential address, or postal address in the Republic. Okay, so up to there. So let's take Apple. Apple computers, situated in America. Apple has an iTunes and App Store where you can buy music, where you can buy apps, applications. Now that company is not in South Africa, but they sell things from the US to people in South Africa. We buy things here, apps. Now, is Apple considered an enterprise for South African VAT purposes? Let's see. They are in an export country. They are supplying electronic services. Are at least two of these things met? So let's take you. So if you've ever bought an app from Apple or Samsung or any of these places, let's put it in your shoes. Do you think they are an enterprise? So, right, so the recipient is you. Are you a resident of the Republic? Most of you guys are. Did you pay for that app using your South African bank account? Most of you would have. So already you can see two of the requirements are met. Or do you have an address in South Africa? If yes. Now, if those requirements are met, that means Apple is carrying on an enterprise. And that means Apple must charge South African VAT to the things sold, to the apps and music sold to South Africans. Okay, very important, guys. Then the last one, 7, the activities of an intermediary. This is very new to the Act still. An intermediary, you'll see, is defined in Section 1, and they talk about it in Section 54 2b. An intermediary is a person, so here's Apple selling to South Africa. Right, so let's just do it like this. So Apple sells to people in South Africa. An intermediary is a person or a company that stands here in the middle. Because Apple is situated in America, so they don't necessarily have the ability or capability or knowledge to navigate a South African space. So what they do is they appoint this company an intermediary. They say to the intermediary, listen, you know how South Africa works. We want you to sell the apps and facilitate the payment of the apps. So a person in South Africa says, okay, I want to buy a new MP3 from Apple. They then they go into the App Store, they put in their request. That request goes to the intermediary. This intermediary then sends an invoice to the South African and collects payment. Right? They then get the app, the intermediary then gets the app from Apple, or the MP3 from Apple, and they send it to you. Apple then charges the intermediary for the app, and the intermediary charges them a service fee. So 10%, let's say. This intermediary over here is carrying on an enterprise. That's what it says over here. So that means this intermediary over here, when they invoice the South Africans, they will have to charge VAT. Right, so here's just a summary of enterprise again. Here at the bottom, I just want you to say plus intermediary. Okay, so these are all the things which are enterprise. It's an activity carried on regularly in South Africa by a person in the furtherance of an enterprise, supplying goods or services for consideration, and it's for profit or not. It also includes an intermediary. It also includes the supply of electronic services in an export country where at least two of the following criteria are met. Okay, so that's what we just did. This is a summary for you. What is not an enterprise? And you can find this in the definition as well of enterprise. What is not an enterprise? Services supplied by an employee to an employer. So if you work for someone, you are earning money, but you are not carrying on an enterprise as an employee. So if you earn remuneration, guys, that's what's highlighted there. That is not subject to VAT. You are not carrying on an enterprise. Please note here as a comment, non-executive directors do not earn remuneration. So I'm going to make a comment here. So does, they may be carrying on an enterprise. We'll talk about it in a second. Okay. Next up, what is not an enterprise? A hobby. So you have a very expensive hobby where you collect things and you then you collect it, keep it for a bit and then sell it to people. If that's a hobby, if it's a proper hobby, you have to prove it obviously. Not subject to VAT. An exempt supply. Now you'll remember we've already spoken a little bit briefly about exempt supplies. Exempt supplies are supplies which are just not subject to VAT at all. And there are a number of them in the Act. Right. So for example, if you give someone financial services, charge them interest, that's an exempt supply. That's not an enterprise. And then commercial accommodation. Now commercial accommodation you'll see is not an exempt supply, there is VAT on it. So commercial accommodation is, for example, if you go to a hotel, or if you are a company, you own a building and you rent it out to other companies to use as offices or warehouse, any of those. If you have commercial accommodation and it does not exceed 120,000 rands a year, so you make less than 120,000 rands a year from it, then it is not considered an enterprise either. Not something that you see at all very often, just be aware of it. Okay, now, just taking us back up to section 7. Section 7, we said you will have to raise output tax if there's a supply by a vendor, goods or services in the furtherance of an enterprise. We've done supply, we've done goods, we've done services, we've done enterprise. So now we can look at when are you a registered vendor? When should you be a registered vendor? Okay, so section 23 tells you when you need to be a vendor. Section 23 says you must register. So it means you must pay VAT. If you are carrying on an enterprise, we already saw what that is, and the taxable supplies for the enterprise. Now taxable supplies, guys, you'll see as a comment, that's standard rated and zero rated supplies. As we go on, you'll get more familiar with it, but just make a note of that, you'll see that. Taxable supplies exceed 1 million rands for the period. Right, standard rated supplies is where you charge 15%. Zero rated supplies is where you charge 0%. Remember, just as a reminder, zero rated supplies, they are not exempt supplies. We just, instead of using a rate of 15%, you use a rate of 0%. They could have made it 1% as well. That's what I'm trying to show you. So that is considered a percentage. Right, so if you make more than 1 million rands in a 12-month period, you must be a VAT vendor. So if you go out, you decide to start your own little business, if you make 1 million rands, more than 1 million rands, you have to be a VAT vendor. If you don't do it, you're breaking the law and you can get into big trouble. This 1 million rand must not include exceptional items, like the selling of a business. Okay, so let me explain to you. Let's say you've got a business and your business every year makes 700,000 rands. That is not enough to register as a VAT vendor, to be forced to register. You can choose, which we'll see at the bottom, but you're not forced. So let's say you have sales of 700,000. Now you sell one of your buildings that you use, and you sell that for, let's say, 1.2 million rands. So now you've collected 1.9 million rands that year. That's more than 1 million. This sale of a building, because it's not what you do on an everyday basis, you don't take into account an exceptional item. So you don't take that into account, you only take the 700,000 into account, and that's still less than 1 million. So this is just to stop a company which is not actually making enough to be a VAT vendor, to stop them from just having to register just because something exceptional happens. Then, remember this foreign person that supplies electronic services that we spoke of, like Apple and so forth? They must register if their value exceeds 1 million rands. And this also applies to an intermediary. Now, I'm just pointing this out to you guys. In the past, that 1 million rands used to be 50,000, but that's not the case anymore. Make sure that it's R1 million, especially if you're using all the legislation. Okay, that is compulsory registration. Voluntary registration is when you are not forced to register, so you haven't made R1 million, but you want to register. Now, a lot of you must think, why would you want to register? Well, guys, there's a lot of reasons for it. First thing is, you can claim input tax. Second thing is, or one of the things is, sometimes some of your suppliers, or the people that you work with, your customers even, they might even tell you that they don't want to use your services unless you are a VAT vendor, because they can also claim VAT back themselves. Okay, so there's sometimes reasons for you to register as a VAT vendor. Another good reason is, let's say you are X Limited, and X Limited makes zero rated supplies. This is just a quick side note. That means their output tax will always be null. Why? Because let's say they sell something for 100 rands, it'll be times 0%, so it'll be null. If they now go and buy things from VAT vendors, and they've got invoices with VAT on it, they can still claim the input tax. Let's say it was 50 rands. So it's possible for these companies, the ones that do a lot of zero-rated supplies, to charge null output VAT, but claim input VAT. So for them, it's definitely a good thing to register as a VAT vendor. So if you have 50,000 rands a year that you make, more than 50,000, you can apply to SARS to register as a VAT vendor. Right, now guys, I've already spoken about this. This is the electronic services and intermediary. Please note, section 54.2b says that if there's an electronic service provider like Apple, Google Play, selling things to South African customers, but they're using an intermediary. The intermediary invoices and collects money from the South African customers. This intermediary will be treated as if they are doing these sales. Right, so they'll have to account for output tax, and they can claim input tax as normal. We are now looking at non-executive directors. Our last little bit here when looking at VAT vendors. First up, what is a non-executive director? Well, an executive director is a director which is involved in the day-to-day operations of a company. So they help run the company on a day-to-day basis. That's an executive one. A non-executive director is thus a director which is not involved in the day-to-day operations. They typically form part of the board of directors, obviously, and they attend board meetings and help with strategic decisions, but they're not involved in the day-to-day activities. Now, SARS has issued 2 binding general rulings recently. A binding general ruling is a general ruling which binds people to it. So SARS identifies something, how a certain transaction or a certain event must work for tax purposes, and then they'll issue this ruling to people saying this is how we're going to treat it from now, and this is what you need to do. Now, what these 2 binding general rulings said, if they've officially said, we do not consider non-executive directors to be employees, because they don't work on a day-to-day basis for the company. They're almost like an independent contractor. If you are not an employee, then it means you do not earn remuneration. Now, why is that important? Because when we looked at the definition of an enterprise, the definition of an enterprise said, it is not remuneration if you earn, not an enterprise if you earn remuneration. So in other words, if you do not earn remuneration, then it may be an enterprise. So you're not excluded from enterprise. So this means that non-executive directors are treated as if they are carrying on an enterprise. So if they are carrying on an enterprise, they are supplying services, right? Then, if they make more than $1 million a year, they must register as a VAT vendor. And if they make more than 50,000, they can voluntarily register. So the normal rules apply. So if you're a non-executive director, you are treated like a person who is rendering independent services to a company, and therefore you might have to register as a VAT vendor if you meet these requirements.